Alright, we are live. Alright guys, so this will be a quick, well, I hope it will be quick live stream. Just let the internet do its thing, let it populate for the time being, and then we'll get started. I think it's a very important stream to address, and I think there are a lot of people who might not realize we are coming to a crossroad in the market at the moment. Maybe it's been addressed before, maybe you don't know what's going on or you don't know what to expect. This will be a very good episode for you. So guys, we'll just allow another 2 to 3 minutes more, and then we can kickstart the live stream, guys. Hope everyone's fine, doing well in this current new normal. COVID, wearing masks, maybe not wearing masks. Hopefully that everyone's friends and family are all healthy, you are healthy, and at the same time, how's the whole job scenario? Hopefully everything is okay. Everything's well here. We are busy with the kids, been trading, investing as per normal, doing a lot of work with the private group, lots of consultations, and of course, naturally, this episode we're going to cover market news, right? Market scenarios, and I think the most important will be the BTC movement, come the overall balanced approach that I kind of want everyone to be informed about. And obviously, if you have your own strategy that has been working well, congratulations. I think everybody has been making good money in the market, and I think that's something that we all can look forward to. What I am now concerned about is a few key points in the market. So kind of like, let's get that started at the moment. Okay, right now, I would say that we are in a toppish scenario for BTC. Okay, this is based on the fact that if you look at this is a weekly chart, right, for BTC, and if you look at the June, July, August, there was a very nice consolidation period that only led to a downward trend after the market hit the infamous 12K mark. Right now, we are at that same level in the same period, which is June, July. Well, we had a little bit of a steeper move upwards from July. We are coming to the end of August, leading up to September. Now, like I said, everything that we discuss on this channel is non-financial advice. It's just my personal opinion, and the strategies that I'm sharing with you, I adopt with my group as well, and myself included. So, okay, guys, let's just put it in perspective. Right now, we know the theme is DeFi staking, right? News has been relatively bullish. You have Omisego doing a fantastic 100% return just yesterday. We have Link that went from the lows of whatever it was to all the way until $20. Obviously, the whole market was wild about Link. A lot of news coming out from various groups. Palm Beach saying that it will go to Palm Beach going all the way to $100. That obviously was to me way overhyped, right? Because like I said, although prices are all about speculate, all token valuations are speculative even until now. There's no way that we can validate how much revenue is being made. And how much of that revenue goes to the company. It's always decentralized. It always goes to the stakers, the bakers, the miners. It's never directly to the company, right? So valuation of tokens usually just means a oversubscription or a overhyped demand for staking, right? So I think a lot of the game is being played in terms of staking. How much of a particular existing circulating supply is being staked. So the more, so let's just maybe have a pie. Imagine a pie shape, right? And that's 100%. You have a good portion in the reserves of the company. Okay, that's that's minted, it's in the reserves of the company. You always want to also have a token that it has a capped supply. So say for example, Bitcoin is 21 million, there will never be more, there will never be less. Same thing goes for any kind of token that you are looking at. You also would prefer a capped supply. And realistically, what kind of market cap would actually push it to higher highs? Okay, so I noticed, okay, just like I said, I noticed, let's exclude the top 10 for a while, because making money on the top 10 is usually with leverage these days, because the returns on plain vanilla is just too low. Okay, I don't even look at the top 10. I would prefer looking at coins that are, say, 50 to 20, or maybe 100 to 50. I'm a little bit uncomfortable because the volume is just not non-existent. So I would prefer, say, coins between rank 50 to below 20. You know what I mean? So they potentially, right, could give me the better ROI, still conservative compared to 2017. Let's put the 2017 numbers aside first. Let's just focus on how realistic is it to 10x your money? Now, Link being a clear example, and it has created a lot of bullishness, a lot of optimism. But I'm worried for a lot of people who have not been through the bear market, who have not been trading the bear market. They are like, you know, they got lucky, right? They got lucky buying into a number of coins, putting 1,000 here on this particular ICO, 1,000 there on another ICO. And then Link was one of their ICO holds or ICO buys. Fantastic. 1K basically got you anywhere from 60 to 70,000 depending on how much you bought, right? That is fantastic returns, guys, for a period of 2 years holding. It goes to show, right, that crypto can give you that kind of ROI. But can we have that mentality for everything? I would always tread on the side of caution, despite the fact that I am a permabull. Everybody knows that I'm a permabull, meaning that I am always long-term bullish, but in the mid to short term, I'm very willing to be flexible on my analysis and my strategy. So the strategies could consistently be changing from anywhere from 1 to 3 months. This is something that's very important, and a lot of people cannot keep up. That is one thing that is usually going to hinder your potential profit taking, or it's going to hinder your emotional state, come risk management ability. Okay, so that's very important. Now, we need to ascertain step by step. Okay, so right now, we are at this point, okay, of the market right now, okay, where we are at the 12K mark. Doesn't seem to want to break 12K. It hasn't shown that it wants to consolidate at 12K either, okay? Because very quickly when it went above 12K, immediately there's the sell down. Because let's just put it this way, every single trader, institutional trader, will all be putting their their limit orders at 12K mark. If it miraculously goes there, and it's considered the high of the period. Nobody's gonna look back and keep hoping for 20K, 50K, 100K. Okay, you're just being a dumbass. Okay, it may go up there in the near future, but at the moment, with the bearish market, with the bearish scenario where companies around the world are closing, obviously new companies emerge, blah blah blah. But let's not talk about that. Overall, it's still a bearish market with the stock market way, in terms of valuation, way overbought. I would also assume that, just to sidetrack a little bit, I would say that a lot of the money that is flowing into other stocks that are pushing the market cap is a little bit tricky. What I notice is that when there are certain key companies that have been around for decades that are closing down, where does the money go to, or where does the flow go to, right? If they were able to exit that particular company just before any kind of major news or major foreclosure, bankruptcy announcement, they would have to flow to a more comfortable competitor, right? Maybe not a competitor, but maybe another stock. Because if the whole industry of the airlines are hit, the whole industry is hit. There's no way that American Airlines is gonna be better off than Virgin Atlantic or whatever. You know what I mean? Or Lufthansa. The whole industry is gone for now. At least for now, it's not gonna be profitable. Not gone, but not gonna be profitable. So I feel that there is a fund flow. So crypto seems to be getting a little bit of that, where you have a little bit of a trickle. We are nowhere near any kind of large, exciting market cap where we're in the trillions or whatever. We are now like even struggling just to stay above 300 billion. So that being said, that gives you a bit of an idea. Gold is at 2K, or at least it was at 2K. Now we're looking at 1934, 1950. Silver has been doing very, very well at 26 US dollars per ounce. I think silver has more upside than gold. Not saying that gold could not go higher, but I just prefer to not hold gold at this point of time because gold is at a historical all-time high. So I will not touch gold, right? But silver, I wouldn't mind, right? It is just based on the fact that we are in a scenario that if stimulus packages are going to be announced throughout the world to kind of keep the wheels turning, for businesses and individuals, especially giving aid to folks who kind of lost their job because of COVID, so on and so forth. I think the overall US dollar is not going to be too good, and that's going to be helping other asset classes. So other asset classes could include stocks that are paying a good steady dividend. For some reason, they are still profitable. Staking, obviously, in the crypto market is very attractive, okay? But the problem with that, I will come to that very, very soon, okay? Then you are looking at the normal asset classes like, for example, precious metals. The magic market, which I am in at the moment, and I've been in since the past year, has been actually growing. Okay, we're talking about literal capital appreciation in the vintage collectible market, right? For Magic the Gathering, okay? And I have enjoyed 30, 50, 100% returns on certain key cards in my collection, which I did not expect because it's such a mature market. And we're not talking about cheap cards here. The cards that I have are anywhere from $300 to up to $1,000 to up to $5,000. So the capital appreciation obviously isn't so attractive at the higher ticket size, but it's definitely better off at the lower ticket size where it's kind of more affordable, right? So somehow people are willing to spend at that level, and I notice money is following in, and I've enjoyed some returns on that in terms of capital appreciation. Not selling anything, but I'm just sharing with you that there is a capital appreciation, which is very unique. Now, let's come back to crypto very quickly. So at the moment, cryptocurrency is in a new kind of theme, DeFi, staking, right? News of Coinbase staking potential coins also drives further appreciation in these cryptocurrencies. Now, they may be on theme, they may be off theme. Okay, it doesn't matter, but I want to bring your attention. If you have been participating in the market for the past 3 months, okay, so since March, okay, 3-4 months, okay, let's assume since March, you will have had a very nice appreciation in your long term, and at the same time, if you were able to catch certain key pumps, right, you would enjoy anywhere from 50 to up to 100% returns, okay? And of course, if you're more risk on, you would enjoy even better because you're using leverage, which is fine. I'm not a big fan of leverage, but I know that people who are able to maintain a very good position size are able to benefit from it because they are able to control their position sizing. So totally fine, right? But we are coming to a point in the market where we might have a bearish scenario. So let's just go for the bearish scenario first, and of course we will talk about the bullish later because bullish is just it's just so straightforward, right? But bearish is the one that I'm more concerned, and I want you guys to kind of zoom in and hone in on it because you probably are having a nice capital appreciation in your portfolio right now, or you have exited certain trades that are profitable, but you don't know what to do. You keep wanting to throw back your money, right? You want to keep throwing back that USD tether. You don't want to cash out because you're worried about taxes. All these scenarios are possibilities. But I kind of want to stress one thing. If the bearish scenario happens, okay, I think the morale will be low for a lot of people. Now, for me, I've been in the market for since 2016. Bull, bear, mostly bear, I have been able to just control that. We are always in the scenario where we are controlling our position size. Now, there's something that I kind of want to address. The position size, once again, my content is always a mix and match. It's never always very synchronous. So I hope you guys are a little bit more patient with me. So the position size is something that I've always had an issue with. So I don't want to name the particular channel. I respect the particular channel's risk position sizing, which is 1%. Now, nothing wrong. When you are a high net worth individual, 1% of 100,000 is still decent. 1% of 1 million is definitely decent, so on and so forth. But what if it's 1% of 10K? You know what I mean? If cryptocurrency, right, is going to give me that high ROI, that potentially high ROI, 1% of 10K liquid cash is really peanuts. And for it to gradually build up to that stage is actually very challenging. So I always kind of am against that, but I also understand why that is so. Because you don't want to be in the situation where you commit too much capital into one particular token or a basket of tokens, and it's like basically 50 to even 80% of your liquid cash. That is a concern, obviously, because you don't have your financial situation together, right? So your liquid cash could be very important for you in the next 3 to 6 months just to pay rent, put food on the table, for gas for your car, keep up with your car installment, and it's in a trade, right? And now more exchanges accept credit card. So you think that, oh, okay, no worries, I'll load up my account with the credit card at the moment, put in for a particular trade that I hear on my favorite YouTube channel, favorite YouTuber, and hope for the best. Hopefully, since everybody's making money, right? My 10K credit limit, I'll just use up everything. Shit, I'll just make a 20-30% return and hope for the best, right? I can clear that by the end of next month or the next billing cycle. Now, what people are going to suffer from if they do not understand liquid cash is very important. It is money that you have. Most people are trading with money that they do not have. So this is something that I do not condone. Okay? Because if you are trading with money that you do not have and it's literally you're not able to pay up the bill, why is that so? In the event that you selected a coin that does nothing, I guarantee first thing you will cut loss because you already know you have to pay the bill already. So sure, if it's a 10K if it's a 10K amount that you funded with your credit card, okay, and the position is down 15%, for example, you lost $1,500, you may say, okay, I'm cool, I can cover, right? If you're doing plain vanilla like what we do and we educate in our group, we do mostly plain vanilla. We never touch margin. I will never ever encourage anyone to touch margin. So when we do a plain vanilla, we know that, okay, once we enter a position, we are not going to be worried. Whatever the volatility, 50, 80%, we already accepted that fact that could be the swing, okay? So we know that no one's going to be liquidated, one. At the same time, in the event that we get it wrong, we still have further additional bullets to trade because we don't always dedicate one bullet to the trade. We may potentially have 2 to 3 setups in at lower price points, right? So that we can average down. Once we average down, the likelihood of us being able to break even and profit is higher. Okay, so it's very, very simple, very straightforward, very ABC, nothing too sexy. It's just straightforward. So let's assume that we have a bearish scenario, and so happen you wanted to buy a particular cryptocurrency. Okay, any particular cryptocurrency. You heard it from your friends. Shit, I made an X amount, a shitload of money in the past 2 to 3 weeks, man. You really gotta get in. And this is your friend, right? It's your friend. My friend would never hurt me, right? Your friend would never hurt you. He probably means well because he knows you probably need the money. So he tells you about this. You're like, shit, I don't have the liquidity though. And you just want to jump in. Emotionally, you're psyched up. You're like, shit, this is it, man. I still have my job. Okay, I'm happy about that. I'm still able to bring a monthly salary. I have a credit limit of 10K. Yeah, let's do this, man. Let's do it, man. So you do it, you load up, and the bearish scenario happens. You're down 30%. Where are you gonna get the 10K to pay the credit card bill first? Okay, let's just say you do plain vanilla. Okay, you don't know what is margin. The problem is right now there's isolated and cross right in front of your freaking dashboard. Okay, so the worst thing is that when you have the access to it, it's just there, guys. It's just staring you in the face. You're like, times 3 times 5. So does that mean that my 10K can be 30K? Holy shit! Let's do it, man! Because that 10K can be 30K, and let's do it, man! I want to get ahead in life. I want to be able to bring home the bacon. And then the inevitable happens. It was your first time, you were a noob, and it went down. The whole market could go down, or it's just that you were the unfortunate soul to buy last. You were the $19 link buyer. Let's just put it that way, because it's going to go to 100. Let's buy it at 19. Let's buy it at 19.50 is still a deal, guys. 17, let's get it. Let's get it. Now it's already at $14. Link is already going to go down because firstly, a lot of people are cashing out. There's no staking up yet. Okay, there's no staking up yet. It's the ROI is just not going to be very favorable. Everybody's cashing out on it. That's why it's going on to other cryptocurrencies. Okay, or it's just going to straight up go to USD Tether, sit there for a while, because we are now at a key point. Anyone who has been observing the market will observe these key points. Okay, anyone who has at least some technical knowledge, right, who has been speaking with, or they've been involved in they're in technical groups themselves, will tell you that, right? It's at 12K. We may have a bearish scenario, like what I'm telling you right now. So the good thing is that, so back to the strategy, right? Try not to use cash that is not liquid to you, or at least if you need to get involved, at least know that you have something in the bank to pay that off. I understand that you want to capitalize. It's something that I have been in that scenario, that I need to buy something. My credit card is the first thing that I will think of. Make sure that you can clear the bill, because the interest on late payment is no joke. Okay, the interest on late payment is no joke, and you do not want to be in this kind of shit scenario when the whole market turns. You're now having an economic crisis. It could affect your work, and right now is a employer's market, meaning that there's so much talent out there that you screw up in your job, you're gone, because there's just so much talent, younger talent, people who are just more talented than you, willing to take less salary than you, and you're on the chopping board. Or maybe you're already on the chopping board. Don't do random shit. Moral of the story, don't do random shit. Okay? So back to this. So right now, if I would say that, let's assume that I have a existing portfolio and you have an existing portfolio. We both had an existing portfolio. We've enjoyed 50% to 20, we've enjoyed 2x, 3x already on our long-term positions that we've been parking since 2018 all the way we built our position, okay? We're now enjoying that. And along the way, we've been doing some swing trades, some short-term trades that have given us that 30%, 50%, 100% ROI. Fantastic. We have everything going on. It feels good. Okay, so now we're in that scenario. So now that we are potentially anticipating a bearish scenario, what do we do? Okay, so here's the plan. I am going to basically cash out a good portion into cash, and I will suck it up. I will pay the taxes on it. Okay, but at least I have cash in my pocket. In the event, now how much to cash out? Okay, so firstly, you must leave aside an amount that you are emotionally comfortable with. You're not gonna panic if suddenly the market turns and the bearish scenario plays out. You are gonna feel that sense of depression, anger, stress. You are like, cool with it, Ryan. I accept the amount that's gonna go down. You already told me that the bearish scenario is gonna play out. It may not happen, guys. Okay, I'm not a fortune teller. Okay, it may or may not happen. So in the event that it does happen, okay, I'm cool with it. I already took out that amount of money that is being discussed in this video. You really helped me out. That amount would be dependent on A, can it clear up your certain debt? If it can clear up certain debt or bring it down, please do so. The other scenario is that you want to just use it for monthly liabilities and not have to tap on to your monthly savings. I think that's a fantastic short-term goal. You know what I mean? I know there are certain channels that preach not having to cash out from the market. But let's be real, everybody. We are all living from paycheck to paycheck. Okay? I don't have to, but there are a lot of people who live paycheck to paycheck. So they are very dependent on their paycheck in order to give them an income. And we know that if it's paycheck to paycheck, it's always fully utilized. Now, if your crypto portfolio is going to give you that extra boost in liquidity, you feel more confident, you feel happier, you treat your kids better, your spouse better, you work better. Emotionally, you just feel fantastic. I want you to feel like that, even in a bearish market. Even though we may have the bearish scenario playing out. That's what I want for you all. Okay, so there's that. Okay, so I will not specifically mention percentages because it's very individual. Some people may want to cash out 30% because the 70% is so much in the money that whatever, even if it's a 50% down, I'm still in the money. Great, cash out 30%. If you're someone who is very new, maybe you just started, unfortunately, your staying power may not be there because a drop will put you back to square one. Is it? So there's also that possible scenario that you came in slightly later than everybody else, right? So if you came in later than everybody else, your take profit strategy at this point will be very different already, right? Now, what about the folks who came in literally maybe in the last 2 to 3 months, not having that much liquidity, not having that much long-term positions, still probably swing trading, getting lucky here and there? I would say that everything should be status quo. Don't overcommit at this point of time, okay? Because you're now in a situation where the BTC level is high. Certain altcoins are actually still very favorable, but I don't want to go into that because you may not have been with me or been in my private group for a while. You don't even know what's going on, and I'm not going to mention any particular coin because that's just very biased, right? And I don't want people to say that, oh, you're mentioning this coin because you're in it. Yes, there are coins that we've been in since 6 months to even a year ago to even 2 years ago, all right? So it's not fair. It's not fair because suddenly I just mentioned it and then after that you put your money in and in the end, the bearish scenario happens, you're going to have a bad taste in your mouth. I'm not going to go through that all over again. So if that happens, okay, you are at least prepared. You have not committed too much of funds into the market at the point of time. You just keep a very simple, low-key dollar cost averaging strategy. Observe the market. Sometimes you may not need to put in anything at all. You don't have to buy every month. You just diligently, now there's US dollar tether, you see. So by having US dollar tether, it's a stable coin, but at least it's dry gunpowder. You're not buying BTC directly because when you buy BTC, obviously you could be buying at the high potentially at this point. You see, you could be. But of course, if it continues to trend upwards, great. You manage to enjoy it from current price point to 12K, 14K possible. But at this point, it has not breached that level, that resistance. No one's going to talk all this kind of crap, okay? No one can predict because volume OBV can... Okay, so sorry, let's not use bombastic terms. Volume is the incoming funds that are coming in to to Bitcoin, okay? Just say incoming funds, okay? So if there's insufficient funds coming in and buying up at the current prices, you are one of them. You are the unfortunate soul that buys Bitcoin at the high for the current price point. You are going to potentially maybe have a 30 to 40% retracement. Are you cool with that? You must ask yourself. So always buy USD Tether straight up and then observe the market first. Now let's talk about the bullish scenario. I think I've delved too much on the bearish. No one likes to hear about bad stuff, you know what I mean? So let's talk about the bearish. Let's say we break 12K. Market cap maintains at 350 billion, pushing up to 400 billion, come dominance dropping to 55% and below. That's a new scenario. You and I will enjoy that scenario. How do we enjoy? If you had positions from 6 months ago, those positions are definitely gonna more or less at some point start to trend upwards, right? Okay. If they are showing great development, they are on theme, you're going to enjoy a capital appreciation on that portion. Okay, BTC will obviously be maybe 14K, 15K, all right? But at some point, there will also be a nice either consolidation or resistance. Nobody knows that yet. So the bullish scenario is one of the most, it wouldn't be saying the simplest, but it's just easier because now you're in profit. Do you want to keep taking profit at that point? Yes and no. It would depend on your situation. But if you're at this point and you're already taking profit and you're preparing for the next 3 to 6 months, Christmas is coming, okay? The end of the year is coming. Obviously, no one's going to be doing any intensive traveling overseas, but maybe you just want to have a inter-country family kind of get together, and you want to have a little bit of cash, spend a little bit, buy a little bit, support the retail stores or whatever, At least you have the ability to do that. You don't feel so tight. You know what I mean? So that's one of the scenarios. The bullish scenario is not as exciting to me because I feel that the opportunities get less and less attractive as the market and the prices go up. I I, in my heart, prefer bearish because there's always dry gunpowder, and at the same time, there's the potential of moving certain of my certain assets towards buying more tokens. That's just me, right? It could be very different for yourself. So I think all these scenarios, based on the fact that I'm having a more balanced approach, is very important. To me, it's considered balanced. I'm just covering as many angles. For me, my preference is that I'm okay to keep up to 70% of my portfolio, right? That's my personal preference. 30%, so 30% is probably liquidated at this point just to go into USD Tether. I don't need to cash out to cash, but I don't mind sitting in USD Tether because I don't know what's the outcome. I'm just being very strategic at this point in time. So that's it, and I hope I kept it within a certain time frame. I don't have anything else that I have to say or mention. I hope that this video kind of helped you out and give you a little bit of a insight. Naturally, if you are interested in joining Protégé Pro, that is available. Please email us at info@cryptogrinders, info@cryptogrinders with an s.com, and I will be more than happy to assist you. This is something that I feel that you're gonna enjoy the market because right now it's more bullish. It's easier to make money, but I would always be more cautious not to touch margin trading until you are very seasoned, or at least you know how to control your position sizing. Most people don't encourage margin. I personally don't encourage margin, but you know what? It's there, you see. So it's like, it's there. So I cannot like avoid it, and I cannot stop people from using it, but at least, okay, you tell people that there is a level of, it's a double-edged sword. Okay, so just stay low, don't do it. The next one, it's a little bit of it's more of being careful on where you stake your coins or how you stake your coins. There are a lot of platforms that are providing a lot of attractive returns. And what I'm worried is that these platforms could close on a whim because people don't know how to trade. Okay, people don't know how to trade. People don't even know when to take profit. They only know how to buy because it's a very consumer mentality, you see. And the likelihood as a consumer, you buy, but you rarely sell. Right? You buy is for your own use, right? Shoes, clothes, food, everything is all for your own consumption. But you don't ever think about flipping. You don't even think about buying and selling. Not many people know how to do that, right? So you would be in the scenario where, okay, since this token is giving me 7%, 8%, I will join this platform, say Compound, for example, and I'll put my tokens that I've already purchased with them. And since the price has dropped below my buy price, I'll just stake it. That's what everybody thinks and what everybody does. You see? So in that scenario and with that mentality, it does also help to maintain certain tokens at certain prices, right? This is the truth, right? Because they're already stuck. They're not gonna sell at a loss, and maybe they don't need the money. That's also a possibility. And yeah, so end up there's a price support that will eventually happen. Okay. The problem with that is that you are not keeping your funds liquid. Okay, and that's also unfortunate, right? Because you don't know how to buy and sell anyway. You don't know how to read charts, and there's no way to put a valuation on a particular token. There's zero ways. Who is to say that let me just put it out and straightforward. When that report came out, it says that Link is going to go to 100. Why? Why is it valued at 100? Can someone answer me? Can someone in the chat maybe tell me why is Link valued at $100? Can someone please educate me? Because I'm just someone who has been in the market long enough, and till now I cannot have a answer, right, that can validate any price point other than willing buyer, willing seller. That means anyone who is willing to buy Link at $20, yeah, it's worth $20. If anyone is now the market price is $13, that is the market price. The market is correct. The market is the one that's putting up the valuation in that sense. But who can tell, is it actually worth 10 cents or it's actually worth 100? Right? So let's not be so easily taken in by these reports. Let's be a little bit more cautious and kind of do a little bit of back and forth with other groups and try to challenge that grain of thought. All right. So guys, that is all I have for the video. Take care, God bless, and see you in the next live stream.